Pennsylvania Republican Senator Pat Toomey. I want to discuss the president's budget. Senator Toomey, I know you and I had a little bit of a discussion on that this morning, but let's quickly talk about how comfortable are you with this idea of decoupling, because this is what this is. It's sort of a two-part strategy here. Decoupling the payroll tax holiday extension from unemployment benefits and the so-called doc fix, apologies for the Washington speak, and extending it a year without paying for it.
Well, I'm going to think about this, Chuck. I've got some real reservations. I think it'd be much better if it were paid for. You know, this is money that comes out of our Social Security resources, and it really should be offset. So I'm gonna wrestle with this one.
And I want to ask you, you want this extended for sure, or do you simply saying if you're going to do this, you're not crazy about it, but you got to offset it? I'm just trying to understand your position.
No, I'm comfortable with an extension of it, but I really think the extension should be offset. And so let's see what the House actually sends over, but I have reservations.
And about unemployment, the unemployment insurance benefit and the so-called doc fix, and then that gets us into the bigger budget battle. You okay with that as long as it's paid for?
Well, again, they should be paid for. I'd like to see some reforms in the unemployment insurance approach. The doc fix, look, this is a fiction in our budget we've maintained for years, pretending that we're going to have this massive cut in reimbursements to doctors. It was never going to happen. It's not going to happen. We ought to have an honest budget and reflect, reality.
You know, there's one of these funny things in talking about the budget, and I was having this discussion with colleagues. If you guys did nothing, enacted no laws between the doc fix, the AMT fix, and the Bush tax cuts, that would be a lot of revenue that would suddenly come into the government, and the deficit could get cut pretty quickly. Fair assessment?
Well, of course, it's totally theoretical, and it doesn't take into account the amount of damage that would be done to the economy by the biggest tax increase in American history. And like the tax increase that the president's proposing, it's the worst possible kind. You know, every bipartisan commission that's looked at generating more revenue, if you think you need to do that, they've all agreed the way to do that is to simplify the tax code and clear out some of the deductions and write-offs and loopholes and credits and lower marginal rates. Don't raise them. And the president's proposing that we increase marginal rates and huge tax increases on savings and investment, which is definitely bad for the economy. So I know on the surface it looks like that's an easy way to solve the deficit, but it doesn't do the job.
Being a little facetious here, but let's talk about this one specific issue here when it comes to, you were talking about taxing on dividends and investment.
Right.
Do you feel like, though, that there are a lot of people that have taken too much advantage of the 15% tax rate on, so whether it's carried interest or this dividend income, and that maybe there is a happy medium here that accounts for people that are essentially stashing income in maybe phony small businesses?
No, I don't think that's what's happening at all. I think the people who want to raise this simply want to raise taxes on investment income. And one of the many reasons that I think that's a bad idea is that it depletes the amount of capital that's available to be invested in the economy, and it's invested capital that allows us to grow and increase wages and create jobs. But the other thing that I think we really need to remember is dividend income to the owner of a company, the shareholders, that's only possible after the corporation has first paid tax on this. So we have a top corporate tax rate of 35%. With what's left over after that is paid, a dividend can be paid. And now the president wants that to be subject to a 43% tax when you include his top personal income tax rate and the taxes that he's proposed and actually are in law from the health care plan. The net effect is to have marginal taxes on investment of over 60%, and that discourages investment.
Do you believe that the Bush tax cuts, the so-called Bush tax cuts, they are on the ballot in November? President Obama wins, we go in one direction. The Republican nominees, we go in another. That is sort of one of the more tangible decisions that get made on Election Day.
I think that's probably right. I mean, the president's made it very, very clear he wants much higher taxes. Republicans are in favor of lower taxes, extending the current rates, or better still, reforming the system to simplify it, get rid of some of the deductions and write-offs and loopholes, and lower marginal rates further. So it is a very clear contrast, and the voters will be weighing in on it.
All right. Senator Pat Toomey, Republican from Pennsylvania, thanks for coming on.
Thanks for having me, Chuck.
All right. President